Making tax digital for VAT, and we'll be looking at the impact of that on accounts payable and finance more generally. My name is Nick Dunnett. I'm the Managing Director for ITESOFT here in the UK, and I'm delighted that you're able to join us for this session. So, quick look firstly at the agenda. We will be finishing this with some FAQs and also try to answer any questions you may have during this or as a result of what you hear. Please feel free to pose any questions at any stage during it. You should see an option on the right hand side of your screen that will allow you to type in those questions to us. So please feel free to make use of that, and at the end of the session we'll try to get through as many of those as we possibly can. Anyone that we can't get to because of time, we'll come back to afterwards. And please rest assured that any questions you ask will remain anonymous in that sense. Okay, so moving on. I thought we should start really by looking at who the notice applies to before we move into what the impacts of it are. So essentially the notice is for all businesses whose taxable turnover is above the VAT threshold. The notice itself does include information for organisations whose turnover is below this, so that it recommends they follow the best practices that are included within the notice, I guess as part of their preparation for growth, and to help them as and when they reach the threshold. If you are uncertain around this, then please check with either your accounting team, although if you've got one you're probably big enough, or alternatively with your accountants, just to make sure that this applies to you and to see that the steps have been taken to follow that and be compliant. So apart from that, what do you need to know about this legislation? Well, as I said, who does it actually apply to? It's very clear. Any organisation that's legally required to submit a VAT return. Our focus is going to be on one area of this in particular today, but we'll touch on the broader implications of the notice. And in essence, the key element of this is for the current methods of completing and submitting VAT returns will no longer be acceptable. Just to sort of notify on who it affects, that taxable turnover value currently is around the £85,000 mark. So if you're below that, you will be exempt, subject to one or two other various restrictions and elements for it. So when do you need to be ready? Well, time is actually now really critical. This will kick in from the 1st of April next year. And so if you've not started to make sure that you're already doing the work to confirm on your compliance, it's really getting to become a very important thing right now. If it's not something you've been aware of, it may well be that someone in your organisation already is, and it's worth just checking around to make sure that people are aware of it. You might also see that the impacts of the notice are far broader than maybe initially considered. Part of the notice is about how a VAT return should be submitted, and therefore whether the particular accounting packages that you use are compatible or not. On that particular area, please check with your current software package and with the vendor that they are compliant. At the end of this slide deck, and we've shared the slides already for you hopefully, there is a series of links, and one of those is a link to the government page which lists all compatible and certified compatible software. So you can access that as well to confirm the compatibility of your package. If your package is not compatible, there are also some certified pieces of middleware that are free to use that will act as a bridge between your package and the government's portal as well going forward. So whilst compliance is expected from the 1st of April next year, there is some flexibility in the notice that relates to organisations' timing of their own tax year, and it also includes what Hmrc have termed a soft landing period to ensure that the process and the systems are compliant over a shorter period. So again, please check the details of that for you as an individual organisation as to exactly what your time frames are when you need to make sure that you are ready and compliant. But if in doubt, if you're ready for the 1st of April, you won't be wrong. So, is this legislation really an accounts payable problem? Well, yes it is. As I mentioned, within the notice, there's one particular section that explicitly impacts on the way in which accounts payable and accounts receivables receive, handle, manage, and store the invoices that they are either sending out or receiving in. The legislation contains some very specific rules around the management of this information, including what's required and in what format. And this becomes particularly important for the purposes of auditability and accountability. From an invoices received perspective, this clearly is an accounts payable problem. So the section in the notice that's really applicable is section 3, and that's where we're going to drill into and talk a little bit more. Just before we drill into that, I'd like to ask you guys a quick question. If you wouldn't mind responding to that, that would be great. So what we'd like to know is, how do you currently receive invoices into your finance system? Is it a manual input of data that you key them into your finance package? Have you got an automated capture system for processing of data? Or do you use some other approach? Maybe you've outsourced your accounts payable function, something like that. So just give you a few more seconds to complete that whilst we're there. Okay, final couple of seconds. Brilliant. Thank you very much. So we've got a very strong majority there of people on today's webinar with us. Just over 60% of people are doing a manual process, and then an even split of 20% each to those having an automated capture process already and those going through another way of doing that. So thank you for your input on that. We'll drill into the implications of the various different things as we move on. So the legislation, as I said, that we're going to focus on a little bit now is this section 3, and that is titled Digital Record Keeping. It's got some very specific information relating to the life cycle of an invoice from the time that you receive it, and it gives a couple of examples. First of these is now on screen, and you can see that revolves around, I guess, what we would probably have called that manual process in our question just now. Invoices are received into the business, manually keyed into the software. As it stands, an organization that still manually processes invoices today is able to scan these post-processing and store them electronically. This example implies that that may not be possible. It's a grey area, it seems, at the moment, and you need to be careful and make sure that if that is your process, you've got confirmation from your auditors that that will be an acceptable continued process going forward. Second example that they give in this section relates to an automated process, and this is where there's no manual touch from the receipt of an invoice after the scanning process, and where a kind of OCR, optical character recognition, or intelligent character recognition based solution is used. Again, the examples on screen, and please note both of the examples that we're showing you have been copied unaltered from the published notice. In this second example, it states that you can destroy the original. The original paper does not need to be retained for audit purposes, as long as the image of the invoice is stored electronically, and that in supporting this image there is metadata which you can use to confirm the life cycle of the invoice. And the most important part of that is around timestamping and dating of when it came and what has happened to it from its receipt, so that you can clearly show that the digital record you have is an unaltered instance of the original. And this is as applicable for whether it's a paper invoice that's come in or whether it's an electronic copy of an invoice that you've received maybe via email. So for those of you who have got an automated system, and except today that's quite a small number of you on this webinar, you should find that everything is okay and that your solution is compliant with this requirement. But if you have got an older system, please be aware that you just need to make sure that that metadata element and those timestampings are being recorded against the document, and it's not just a pure image only that you've got. So if we think about those two examples and look a little bit further, what are the potential impacts of that on the accounts payable team? So if you are doing this post-processing scanning to archive, it may no longer be sufficient. So at first read and at first face value, that first example says that really that may no longer be sufficient. Indeed, it explicitly states you must keep the original invoice in its original format. So assuming that they don't change the legislation, you need to be careful around that and just be sure that you are able to keep that in the original thing. However, there is a conflict. Right now, you are able to scan post-process, and I think it's important, therefore, that you guys check with your auditors that they are happy from their perspective that a scanned copy is indeed an acceptable and an applicable way of retaining that document. For those of you that have outsourced your invoice processing, then there could also be similar issues. A lot of it will depend on how your outsourced provider actually receives and captures the data themselves. Are they doing it manually or are they doing it electronically? And also then probably the next question that's really important is who is responsible for storing the image and the associated master data that comes with it, and who's got a legal responsibility for ensuring that that is a certifiable original of what you had. There's a second part also of this whole process that's critical, and that's that data cannot be copied and pasted between different platforms or solutions. So you need to ensure that if that is a manual part of your process today, it needs to become an automated process going forward. So for example, if your outsourced provider sends you an EDI feed of your invoice data, you need to extract some of that for sign-off, and perhaps you copy that, paste it into an email, send it to the business review it, update it in the email, send it back to you. If you then copy that and paste it back in again, that will break what the government term the digital linking and the digital journey that the document has been through, and that is not permitted. Okay. So at this point, we'd like to come back to you and ask another question, just based on these kind of bits that we've been talking about, and ask you guys whether you do use a scan to archive tool or if you've outsourced your process. Again, 3 questions. Do you have a scan to archive solution? Do you have an archive solution at all as part of your automated solution? Or have you outsourced your AP process? Okay. None of the above. So again, we'll just give you a few more seconds for that. Let's see where we get to. Okay, and thank you very much for that. And again, a high proportion of people using a scan to archive solution after a manual process, just over 60% on that. And then 25% have an archive solution as part of an automated process. And then 13% of you have outsourced your AP process. So thank you for that. And we'll continue to build on that as we go through the slides. I talked a little bit just as we were talking there about digital links. So I wanted to explain a little bit more about what the government mean about digital links and what they're referring to. So Hmrc have explicitly stated that they do not consider the use of cut and paste or copy and paste to be acceptable and cannot be used as a way of moving data from one system to another, either within or between software solutions. So what would be an acceptable digital link? Well, there's a list on screen for you of a variety of options that they have listed in the notice of what they consider to be acceptable. They have noted very clearly that this is not an exhaustive list. There may well be other options and approaches that they haven't thought about or considered or listed here, and they explicitly acknowledge this, and they do leave it open to alternative approaches as long as they are demonstrably not breaking that digital link. So essentially, if there's no way that an unauditable action can occur that's going to break the transfer of the data and cause something to be changed or have the opportunity to be changed, then it will be an acceptable solution for them. So the final part of the legislation is around the integration with Hmrc, and this is about the actual final submission of your VAT return. The current process that's available through the Hmrc online portal will no longer be available for use, and your submission will have to be carried out electronically. This will need to be provided either directly by your ERP or finance package, or, as I mentioned earlier, through the use of some interface software to support that. As I alluded to, there is a list of compatible solutions that's available, and we've got a link to that at the end of the presentation. It's worth noting that not every solution is compatible yet, and indeed one or two vendors have stated they probably won't be compatible in time. One notable exception currently on the list, when I had a look at it first thing this morning, is that the full suite of Oracle finance systems is not yet certified. So if you're on one of those, be aware you may need to look at an alternative approach. As I say, the link is there, and included in the government certified links are some independent third parties that will act as that bridge between you. But this area is one that you absolutely will need to ensure you've analysed, investigated, and come up with a solution for, because this is critical to the legislation. So, thinking about the various elements of the legislation that we've got and we've talked through, what can you do and what can be done within your AP team as part of the preparation to get ready for that? Well, I guess firstly, if we think about a worst case scenario where scan to archive is no longer an acceptable option, then what needs to be done? What are the risks? What are the impacts? I guess if you've got to revert to a manual process, there's a huge impact. Where are you going to put the documents? Have you got space to store them? Remember, this is both your supplier invoices and your customer invoices, because this affects anything that's got VAT on it. What will be the impact of that? What will be the impact on the actual process as well as the storage? Will it have an impact on your staffing? What is the impact if you're a large organization and relating to other government legislation such as duty to report? And what will be the impact on visibility and managing your suppliers? All of which needs to be thought through and considered. So with this in mind, surely your preference would be to move to a process that is covered in the second example with a digital solution that ensures you've got compliance from receipt to incoming, from receipt of the incoming information all the way through. And obviously, as sort of 60 or so % of you are not currently following that process, it's something that should really be considered. It's ultimately what the government are looking to achieve. It's not surprising, really. This is called making tax digital. So they would like the process to be as digital as possible. I think it's really obvious, that for every pitfall that we highlighted of the manual processes, a digital process can improve and enhance that, and will give wider business benefits beyond just giving an easier compliance with this legislative requirement. So Can the solutions that are out there help you? I think one of the things that's really important with the legislation is time. 1st of April is not far away at all. Traditional on-premise solutions generally take 3 to 6 months from vendor selection to be put in, implemented, and go live. So if you haven't really already selected a solution, you're going to struggle to get something in by the 1st of April. However, cloud-based solutions have really come on dramatically in the last few years, and their biggest benefit, particularly now and here, is about speed with which they can be implemented, deployed, and made available. Whilst they've all got some standard functionality, it's important that you should be looking for a flexible cloud solution rather than a one-size-fits-all, and that will give you the flexibility to build your own business rules alongside the best practices of that shared approach. And I think the other key benefit, as I've said, is time. These types of solutions can be up and running and available to you in days or at worst weeks, rather than in terms of months. And I think that makes a big difference for you in terms of ensuring you're ready. Okay, so just quickly, as a final point before we move into some questions, wanted just to touch on what's happening with VAT as a trend from a global perspective, and a couple of key things that we can see there, just to share that knowledge with you as well. So from a global perspective, there seems to be a move from a post-audit VAT return, which is what we have in the UK now, to more of a clearance process. Why are people looking at this? Well, looking at a report from sort of a year or so ago, there are some very significant gaps in VAT that is paid against what is estimated should be being paid, what is owed. Just looking within Europe, it is estimated that that gap is somewhere between 150 and 250 billion euros. Globally, it's estimated that that gap is about €500 billion. So as governments are desperately looking to close loopholes and find more cash to spend, that switch between post-audit and clearance have a lot of perceived benefit, because it makes it more open, more transparent, more easily controlled, and reduces some of the opportunities for fraud. Currently, most of Europe is in a post-audit process, like we are here in the UK, but there is a trend and a move that's happening, as you can see in this slide, rather switch towards more of a clearance process and offering that real time. Within Europe, it's already in place with early adopters in Portugal and Italy. Spain have now introduced it as a requirement for all government contracts. And so that looks like that may well be a first step down the road. And it just feels as though this is a change that is gathering momentum. And you can see this report projected that within the next 10 years, most of Europe, Asia and Africa would move to this, and South America would move to this process. It does feel that the government's process of making tax digital could be seen very simply as the first step on this process for the UK. And it wouldn't be at all surprising if we see more and more of this happening over the coming months and years. So I kind of covered the key areas I wanted to around this, and as I said, we'd give some time for some questions at the end. So what I thought I'd start by doing is just going through a few of the kind of frequently asked questions that we've come across whilst doing our analysis for this thing for you for today's webinar. First question that we've seen regularly, and I touched on this, was the soft landing period. What do they mean by that? So the term itself was introduced very early in the discussions around this piece of legislation, and the meanings changed over time. So I want to just focus on what the legal definition of that is in relation to this VAT notice. And it's particularly important for organisations whose finance package is not compatible or who have legacy systems and processes in place. So what Hmrc have said is that during the first 12 months, they will accept a cut and paste of data as a digital link. However, even though this is done solely via a computer, it's not automated, so it won't be considered a digital link. So in this case, even if you are copying and pasting within the same software program, you need to think about how you can replace that, but they will allow that as a temporary solution over the first few months, over those first 12 months. One exception to this is where data is transferred following preparation of the information required for the VAT return to another product. That is API enabled solely for the purpose of submitting the 9-box VAT return. The transfer of data to that product must be digital. Okay, so within the first stages of your process, cut and paste is acceptable, but in the final stage of preparing for the submission to Hmrc, that must be electronic. Okay, a second question. Will the Hmrc's portal still be available for use? In short, no. As of the 1st of April, the filing must be done via a compatible software. All right, so anything that is not will constitute a break in the digital process and will not be acceptable. Third one, when will this legislation have an impact on our business? The legislation will apply for your first full VAT period that starts on or after the 1st of April 2019. So here, let me just give a few examples of that. So if you assume your quarter filing is on the 31st of March 2019 as an end date, then your first VAT quarter under this new legislation will start on the 1st of April 2019. If your period end date is the 30th of April, then your first VAT quarter that is applicable will be from the 1st of May. And as a final example, if your quarterly filing end date is the 31st of May, then your first applicable filing will start from the 1st of June 2019. All right. So again, all of this is clearly stated on the government's legislative pages and help pages, and we have links at the end to help you and show you where all of these are as part of this. And fourth question that we've seen quite regularly is, well, what are the exceptions for this? Really, there aren't very many. Obviously, the key one is the size of your organization and the turnover threshold of about 85,000 that we mentioned at the start. There are one or two. So if you have religious beliefs that are incompatible with the requirements, and that is typically individuals running businesses that are unable to use computers as part of it because of your religious beliefs, then there is an exemption available for those organizations. There may be certain areas of exemption for age or disability or remoteness of location. It means essentially anything that Hmrc have said that means it is not reasonably practical to expect the business owner to be able to use digital tools. Okay, and then finally, if your business is currently going through an insolvency procedure, you are exempt, but hopefully that doesn't apply for any of you on here today. If you do need some help and support around this, then Hmrc's VAT helpline will be able to give that to you and be able to support you in confirming whether you are needing to comply with the legislation or not. As I've said, if you are unsure, please check either with Hmrc directly or with your auditors to make sure that what you're doing is compatible and whether you need to comply and what the implications of that will be. Okay. So if you guys have any other questions, then please let us know and we will answer any of those that have come through. So at this point, great news. You clearly are all aware of what's happening and are happy. So thank you for your questions. I hope that's been of use for everybody. As I said, we have provided links to you and a copy of the slides already, so you can access those. Here's a site of the links for you. If you do have any questions after this, then please get in touch with us here at ITESOFT, and we'll be happy to try and help you to answer any questions you may have. And thank you very much for your time today.